Asia markets are mixed as investors weigh up signs of deflation in China's consumer prices. Meanwhile, China has imposed tariffs on $2.6 billion of Canadian food products, that amid a US-driven trade war. And Canada's next Prime Minister says that he will fight and win the trade war against Donald Trump. Hello, I'm Neil Harvey here with the latest business and finance news for you on TRT World. Okay, let's start with China's consumer prices slipping back into deflation, adding fresh uncertainty to global markets. The stocks in Hong Kong, Shanghai and Shenzhen all began the week in the red as building deflationary pressures in China have stoked fresh concern about the world's number 2 economy. Fresh data shows consumer prices fell 0.7% in February, the sharpest decline in more than a year, and producer price deflation extended to its 30th consecutive month. Investors are also grappling with volatility triggered by Donald Trump's shifting trade policies. The US dollar stumbled at the start of the week after last week's sharp losses due to signs of a cooling labour market. Fears of a global trade war have further eroded confidence in America's economy. It's pushed investors towards the safe haven assets, Japanese yen, Swiss franc, both surging to multi-month highs. Bitcoin remains under pressure as volatility in the crypto market has continued, that despite an executive order from the US President Donald Trump saying he loves it and wants to create a strategic Bitcoin reserve. The price of the world's most popular crypto fell around 5% at the weekend, nearing the $80,000 market. Rival tokens Ether and XRP also down significantly. Let's bring in Tim Water. He's a business and trade analyst and joins me live on the line from Sydney. Great to have you on, Tim. China's consumer prices fell and they fell more than expected in February, slipping back into deflation. I know from a business perspective that sounds bad. As a consumer in China, why should I not be absolutely thrilled that prices are going down?
Good to be with you. Yeah, that's right. I mean, I guess it depends which side of the ledger you're on, isn't it? From a consumer point of view, yes, prices are cheaper. But I guess bigger picture, it reflects that maybe the economy is not doing so great and that maybe wages aren't as good as they could be. And that some sectors of the economy aren't performing as well, such as the property sector, for example. So whilst it might look good in the on the shelves of the supermarkets, etc., it does kind of spell that there are sort of bigger problems with the economy. So that's why I think that, whether you are a consumer or you are in government, you'd probably want to be seeing the CPI ticking higher and at least pushing back into positive territory.
I get your point. As the consumer, I don't care. I'm still thrilled because things are getting cheaper for me and I've seen inflation for so long. So explain for me, why should I be concerned long term if the world's second largest economy continues to suffer deflation? How will that have a knock-on effect, not just in the country, in China, but also globally?
Well, that's right, the knock-on effect, as you say. And also, if you look at the domestic picture, yes, prices may be cheap right now, but that can also have or reflect problems on the economy itself. Maybe wages aren't so high because people aren't buying as much. Maybe there are more layoffs. Maybe your property prices aren't worth what they were, say, 2 years ago, and your overall wealth is down. We know that in China, they have a larger, proportion of wealth tied up in real estate. So, and if people did have, I guess, higher property prices, then they would be more willing to spend, and that would be reflected in, I guess, a more healthier looking CPI from an economic point of view. So I guess, once again, if you look at, I guess, the lifestyle and also job prospects down the track and value of your key assets such as property, you'd be wanting to see prices ticking higher because that reflects a more healthy economy, I think.
Tim, let's talk about the US dollar. It's weakened in the last month or so. People have been shifting to the yen and the Swiss franc. Is this just a short downpour and investors just putting their umbrellas up until it stops, or should we prepare for a storm? Is this going to be more long term?
Yeah, the US dollar is an interesting one that was moving higher at the start of the year on our trade war fears. Now it's moved lower in the past, a couple of weeks. So particularly against currencies like the yen, where it's lost about 6.3% so far this year. So I think I'm not quite willing to write off the dollar just yet. I think there are currency-specific reasons. So Japanese bond yields are moving higher, same in Europe. So it's causing those two currencies to outperform versus the USD. Whereas we look elsewhere, the US yields are keeping the King dollar well supported against some other currencies like the Australian dollar, Kiwi dollar. So I think bigger picture, I think maybe the sell-off we've seen in the USD has been a little bit overdone. Looking ahead, I think we could see a rebound once again on those relatively high US yields to most economies if we strip out the yen and the euro, which could continue to outperform in the short term.
And Tim, Donald Trump's decision to wage a trade war against several countries, how is that likely to impact, do you think, the Fed's decision when it comes to raising or decreasing interest rates?
I think the Fed, like the rest of us, are sort of in this wait-and-see mode. As you alluded to, I guess the tariff story is still evolving and shifting day by day, it seems, at the moment. So, and that puts the Fed in a bit of a corner because they don't want to be locked in to a specific path in case we do have inflation implications from this tariff war going on. So I think we read between the lines of what Jerome Powell said at the tail end of last week. They're in basically wait-and-see mode right now and waiting for further data. So a bit of a softer jobs number. So I think a June rate cut from the Fed is in play at the moment, depending on how other key measures such as GDP and, of course, the CPI numbers fare this week. So I think, Fed rate cuts still on the table, but probably not for the next few months until we see, and the Fed sees, how this evolving tariff story plays out.
Tim, great to speak to you. Thanks for coming on. Tim Water, a business and trade analyst. He's in Sydney.
Thank you.
Canada's Liberal Party's chosen former Bank of Canada and former Bank of England Governor Mark Carney as its new leader. He replaces Justin Trudeau as the PM. Riding the momentum of a landslide victory against other Liberal candidates, he's soon expected to set a date for general elections in Canada. Danielle Neri explains.
Canada has chosen their next champion to take on Trump and replace Prime Minister Justin Trudeau, two-time central banker Mark Carney.
I know that these are dark days. Dark days brought on by a country we can no longer trust. We are getting over the shock, but let us never forget the lessons. We have to look after ourselves, and we have to look out for each other. We need to pull together in the tough days ahead.
Carney, who had entered the Liberal leadership race with the most caucus endorsements and funding than any other candidate. It's the first time an independent with no experience as an MP will become Canadian Prime Minister.
Let me start by being clear. We will never, ever be part of the United States in any way, shape, or form. We have to recognize that the Donald Trump of today is different than the Donald Trump of several years ago. Then his objective was to take more of our market. Now he wants to take our country.
Polls are split among Canadians on who is best suited to challenge President Trump and the impending economic disaster should the U.S. uphold their 25% tariffs. Saying that populist conservative leader Pierre Poilievre is favored for trade war negotiations and damage control, but is also most likely to roll over and accept Trump's demands.
But Canadians will win, and we will do it with a new Bring It Home economic plan. We will bring home our jobs, investment, and companies and break our dependence on the United States. We will unleash a fierce free enterprise economy to bring home control of our economic future from outside forces. We will stand on our own 2 feet, be masters of our own destiny.
What's next? A federal election needs to happen before October. But Carney's camp has indicated they could call for a snap election as early as tomorrow to ride the wave of Liberals' rising poll numbers toward ideally a majority government. Danielle Neri, TRT World.
Staying in Canada, China has announced tariffs of up to 100% on Canadian canola, pork and other foods. The decision comes in retaliation for Canada's imposition of tariffs on Chinese electrical vehicles, steel and aluminium last October. China's Ministry of Commerce called on Canada to reverse the measures and eliminate the adverse effects. China's new duties will take effect on March 20th. Okay, let's talk about this now with Rajiv Biswas, who's in Singapore. He's the CEO of Asia Pacific Economics. Great to speak to you, Rajiv. Let's talk about the impacts then of 100% tariffs on Canadian canola oil, peas. Not great news for Canadian farmers, the broader agricultural sector. What do you think, first of all, the immediate impact will be for farmers and any potential long-term impacts?
Well, of course, this comes on the back of the US-Canada trade war. So it's particularly bad news for Canada's farmers, and agriculture accounts for 7% of GDP and 10% of Canadian exports. So with the US being the largest agricultural export market for Canada, China is still the second largest. And for canola, China is the second largest export market for Canada. It's also the largest export market for peas, which is also impacted by China's tariff measures. So I think for Canadian farmers, this is really bad news that they've got a looming trade war with the US, which is their largest export market for many agricultural products. And then on the back of that, you've also got significant trade measures being imposed by China, and they're hitting about the same time in a few weeks' time. So it's devastating news, actually, for Canadian farmers. And the outlook, I think, will very much depend on how incoming Prime Minister Mark Carney can negotiate both with the US and with China. China hasn't hit all agricultural sectors of Canada. Even in canola, the largest part of Canadian exports to China are canola seeds, and that has not yet been hit with tariffs. So I think China's being a bit cautious before hitting seeds, because it is very dependent on Canadian canola seed imports. But the risk is there that there could be even more measures following from China if there isn't some resolution on the fundamental issue from China's point of view, which is that Canada imposed tariffs on Chinese electric vehicles back in October last year, and also on Chinese exports of steel and aluminium. So that's the fundamental problem from China's point of view, and that's where they're looking for some kind of resolution with Canada. Of course, with the US, it's a whole different story and a much more severe impact on the overall Canadian economy, because the US is by far the biggest export market for Canada, much, much larger than China.
Rajiv, thank you so much. Rajiv Biswas is in Singapore, CEO of Asia Pacific Economics. Thank you.
Thank you.
US President Donald Trump's announced that US tariffs on Canadian and Mexican goods scheduled for April could actually go up. Meanwhile, Canada's incoming Prime Minister Mark Carney has already responded, vowing to fight back and win the trade war. Canada's already imposed 25% tariffs on $30 billion worth of US goods, with plans to expand that to $125 billion. Mexico is also expected to announce its own countermeasures later this week. Okay, let's go to Perth, Australia, and speak with Joe Siracusa, Dean of Global Futures at Curtin University. Great to have you on, Joe. Everyone's going to win, apparently. Donald Trump's going to win the trade war. China's going to win the trade war. Now we hear that Canada's going to win the trade war. Any potential downside to this triple victory?
Good morning, Neil. Oh, yeah, all the way around. I mean, if everybody does what they say they're going to do, we're going to have a general downturn in the economy right across the world. And you know, China, the United States, Canada, and all the rest of it. I mean, it just, there's certain people will catch a cold, other people will get pneumonia. You know, when I look at these trade wars, I think to myself, all the adults have left the room. I mean, I can't believe these people, the Chinese, the Americans, have decided to go down this road. I mean, this road was tried in the 1920s and 30s, and it didn't work then, didn't work now. I mean, tariffs lead to trade wars. Trade wars lead to poisoning of relations, poisons diplomacy, and everything else. I mean, these things just don't work. Now, I know Donald Trump has a very tight agenda here. He wants the Canadians, the Mexicans, to do what he wants them to do about fentanyl and about illegal aliens at the border and that kind of thing. He's got his own agenda. But this idea that you can get the Canadians and the Mexicans to pony up money for the taxman in America, while at the same time repatriating your economies, your manufacturing, doesn't make any sense. These things don't happen. And this is not money coming into the Treasury. It's a tax on the American people. So this idea that the American people may suffer some adjustment, that is the understatement of the week, Neil.
I would argue that Donald Trump uses these tariffs as leverage. He basically tries to strong-arm, bully countries into getting what he wants. The problem is when they stand up to him, which is, it seems, what China's doing, and it seems that's what Mark Carney, who's coming in as the PM of Canada, is going to do. They're going to expand tariffs from $30 billion worth of US goods to $125 billion. So basically, they're all going to get into this huge melee financially. Is there anything different that Mark Carney could do or could have done coming in to de-escalate the situation?
Not too much. I mean, he's a smart guy. He's an economist. He ran these reserves in Britain and Canada. I mean, Trump's not dealing with a bunch of dummies here. Claudia Sheinbaum in Mexico is a scientist who actually, by the way, shares a Nobel laureate. And Carney's a sharp guy. I mean, he's not. You can't just push these people around like Trudeau. I mean, Trudeau never pretended to know much about economics. So I think they're going to be able to fight back. And look, if someone hits you with a tariff, you can do about three things in a hurry. You could hit them back with your own tariff and make them suffer, whether in the automobile industry or, people want maple syrup or beer or something like that. And of course, you could engage in diplomacy, and you can also ask people to increase their own production and consumption in their own countries. And I think there's a fourth thing, too, that I would recommend to people. Find another market. If you're too dependent on the American market or the Chinese market, you find something else. And that's where nations like Australia are going to get in trouble, because if they relieve the Mexicans or the Canadian tariff wars, then Trump's going to turn his ire on them and say, look, third parties cannot benefit from these kinds of things. So sooner or later, everybody is in the fray. And they all go down the same tube. And at the end, and I don't know, Trump's got a couple of years in him, but I don't think this tariff business is going to survive Trump's last term in office.
If imports are going to get more expensive all round, is this going to end in a world where we're all buying only homegrown products? And if that was to happen, would that be a good or a bad thing?
Well, it'd be a good thing in a way. But the thing is this, too, Neil. If you and I run industries, or we're in charge of sectors that have purchasing power, we can ask the Mexicans or the Canadians to lower their price by 25% before we pay the tariff on it. So that way it's a neutral tariff. No one's paying anything. I mean, this is going to help people who have enormous purchasing power in the American business community. So, there are ways around this. I mean, there's always a way around a tariff. But I'll tell you what, these things, they've done a couple of things that just amaze me. It's brought the Mexican people together. There's a wave of nationalism coming out of Mexico that I think is astounding. And of course, Mark Carney, he's now in line to maybe have a good fight at winning the prime ministership of Canada. I mean, Trudeau was down in I think 2 digits. Some very bad digits. And this war, this trade war, has brought the Liberals back to life in a way that no one would have imagined. So I think Donald Trump is going to have some sort of adverse effects here, and I think the Liberals might actually even win this thing. And Carney's going to fight back hard. The other guy probably wouldn't fight back hard, Pierre Oliver. But this Carney guy is a smart character, and on top of Trump's threat to seize Canada, I think the Canadians are going to they're going to knuckle down, and they're going to fight pretty hard. I mean, no one in their right mind wants to annex Canada. I mean, they just couldn't have been better neighbors. And the other thing too is, Neil, that 90% of Canadians live within 100 miles of the American border. I mean, they're sort of like honorary Americans anyway, in terms of their consumership. So it's a ridiculous concept. But this idea of threatening people, it's gonna get up their ire, and this is gonna turn a lot of good feelings into bad feelings. And I know I heard Carney say today that Canada can no longer count on the United States. Well, I'll tell you what, he's right on that one.
And Joe, finally, I just want to ask you about Mexico, because we talk about this being like a fight. It's almost like you've got China, America, Canada in a bar, everyone's angry with each other, and the rhetoric's very aggressive. Mexico is expected to announce its own countermeasures very shortly. Does it have the size, the significance, and the punch power to compete, or is it enough that it could just become an irritant?
I think Mexico can have a lot of clout here. They have a huge market share in the United States. They do a lot of business with America. A lot of Americans, as you may or may not know, they drive across the Mexican border, go to work every day like a Eurozone. I mean, there's a great connection there. They can make a lot of trouble. And the other thing, too, is this. If I were a Mexican president and Donald Trump was driving me crazy, I'd just open my borders and let those, 500,000 people come through every afternoon, and Trump would turn around. I mean, there are ways to get even with Trump. If he wants to play hardball, the Mexicans and the Canadians can do a whole bunch of things to make the American people very nervous and therefore put the pressure. And I'm thinking about the pressure from the big three automobile industry. And I don't like to hear this talk about steel and aluminum and Canadian parts on cars. I mean, this is going to kill their business. So, Trump is going to create a lot of things here. But, at the end of the day, Neil, Trump may not even be knowing what he's doing. I heard somebody say the other day that Trump means well, but it doesn't mean anything at all in particular, because he's throwing this tariff around like he's in a bar threatening people. I mean, it doesn't work. Sooner or later, you're going to have to eat it. You're going to have to eat the whole thing. And then you got to explain to your people why they're losing their jobs or they're losing their livelihoods because of some damned idea that you had.
You tickled me there, Joe. Some great suggestions for the Mexican leader. Enjoyed those. Joe Siracusa, thank you. Dean of Global Futures at Curtin University. Okay, let's take a quick look at some other top business stories from around the world. Morgan Stanley has lowered the US economic growth forecast, citing Trump's tariff policy, which could raise inflation and pressure the Federal Reserve. The firm lowered its 2025 growth outlook from 1.9% to 1.5% and its 2026 forecast by 0.1%. The Wall Street brokerage predicts that the Fed will cut interest rates by 25 basis points in June, but later than the markets expect. The White House has withdrawn a waiver that allows neighbouring Iraq to import energy from Iran. Despite its oil and gas wealth, Iraq faces worsening power shortages, and it relies heavily on imported Iranian gas and electricity because of war, corruption and mismanagement. In response, Iran says that it may be willing to talk with the US after Donald Trump's latest move in his maximum pressure policy on Tehran. Japan posted a current account deficit in January, the first time in 2 years that's happened. A weekend driving up the cost of imports. The deficit reached $1.75 billion. Imports rising over 17% year on year. Exports, though, saw a more slight increase of 2%. The rise in imports primarily fueled by higher demand for smartphones and electronic parts ahead of the Lunar New Year holiday. And Virgin, that once operated intercity train services in Britain, is now planning to launch new services connecting London with Paris and Brussels. To fund the cross-channel rail venture and compete with Eurostar, Virgin Group's aiming to raise $900 million. Of that, $400 million will come from equity. It's expected the remaining funds raised through debt. Over the past few years, Turkey has put a lot of effort into empowering women, supporting initiatives that encourage female participation in the workforce. Omar Bakalulu visited one such project in Bursa and sent this report.
In a small village of northwestern Turkey, a group of women is turning tradition into opportunity. The Umur Bey Women Entrepreneurs Association was founded to support women by creating jobs and financial independence.
I started this journey in 2019 with 22 other women. The demand for our products was so high that what started with just 2 tents has now grown into this facility. As the women working here gained financial independence, they became more confident and grounded.
Here, around 20 women work together, producing homemade goods that reflect the region's rich heritage.
We work in 2 groups, sometimes for 3 or 4 days, depending on the shift schedule. Since this region is known for its olives, we mainly produce olive oil-based products, including a very special type of dessert.
For many, this workplace is a lifeline, helping them earn an income and gain confidence.
This place is almost like a psychiatric therapy center for us, truly a place of healing. Being able to help others, to reach out and support people is a wonderful feeling.
Women's participation in the workforce in Turkey has gone up from 25% to around 37% over the past 2 decades. The government now wants to take that rate to around 40% by 2028, and initiatives like this will play a crucial role in achieving this ambitious goal. During the period, the number of women in the workforce has more than doubled, reaching nearly 11 million as of January 2025. Representation in top government ranks and corporate leadership has also seen significant growth. In 2005, only 9.5% of Turkey's ambassadors were women. By 2024, that figure had surpassed 27%. With growing support from grassroots initiatives and national policies, Turkey is seeing a shift toward greater gender inclusion in the workplace. Ömer Bakkaloğlu, TRT World, Bursa, Türkiye.
And that wraps it up. That was your daily business. I'd like to say thank you for watching, and also just point out thank you, because the pleasure really was all mine. Hopefully, I'll see you tomorrow for more.